Welcome to the Qanexra Weekly Market Recap. Institutional analysis for the week ahead. Gold surged 0.82% this week, confirming a powerful bullish breakout above key support and consolidation zones. The week began with a strong rally from the 4,271.6020 low, driven by renewed risk-off sentiment and inflationary concerns. Prices climbed to a weekly high of 4,374.6410 on Thursday, fueled by dovish Fed rhetoric and geopolitical tensions. A pullback occurred on Friday, testing the 4,304.4200 support level before stabilizing near the 4,339.3650 close. The price action reflects a broader shift toward higher prices, with momentum clearly favoring bulls. Gold remains firmly in a strong bullish trend, confirmed by its position above both the MA10, 4,294.8957, and MA20, 4,250.0916. The Raymond swing pivot at 4,326.3643 acts as a psychological barrier, now acting as a magnet for buyers. Current price is comfortably above the R1 resistance at 4,348.3085, indicating strong momentum. The S1 support at 4,304.4200 has held multiple times, reinforcing the bullish structure. Next week, traders should monitor the ability to hold above the R1 level at 4,348.3085. A break above this would signal further upside potential toward the next resistance zone. Conversely, a failure to sustain above R1 could trigger a retest of S1. With momentum locked in and key levels under control, I remain bullish. Bitcoin advanced 0.39% this week, consolidating above the $85,000 psychological floor, but failing to break higher toward its key resistance at $90,000. The week began with a sharp pullback from the $90,000 high, driven by profit-taking ahead of major macroeconomic data releases. Prices dropped below the $86,000 Raymond swing pivot on Tuesday, triggering short-term bearish sentiment. A modest recovery followed by midweek, peaking near $89,000 before retreating toward the $84,000 low on Friday. The weekly close remains below both the 10-day and 20-day moving averages, confirming the strong bearish trend. Bitcoin is trading below the MA10 and MA20, which are critical for short-term momentum. The Raymond swing pivot at $86,000 acts as a crucial support level. Breaking below would signal further weakness. Resistance at $88,700 is immediate, while the $84,900 level represents a deeper technical challenge. The current price is within range between these levels, indicating consolidation under pressure. Next week, traders should monitor the $88,700 resistance. A close above this level could trigger a retest of the $90,000 high. However, failure to hold the $86,000 pivot may lead to renewed downside towards $84,900. Given the negative slope of the moving averages and the recent breakdown below the pivot, I remain cautiously bearish. Eurist retreated 0.38% this week, consolidating near the 1.1702 low, but failing to break above the 1.1804 high. The week began with a bullish push toward 1.1804, driven by stronger-than-expected economic data from Germany and France. However, by midweek, selling pressure emerged as traders locked in profits ahead of key central bank meetings. The price then dipped to a weekly low at 1.1702 before rebounding slightly, forming a narrow range between 1.1702 and 1.1804. The pair is currently trading below the 10-period moving average, 1.1722, but above the 20-period moving average, 1.1674, indicating a mild bullish bias. The Raymond swing pivot at 1.1741 acts as a critical psychological level, serving as both a potential support and resistance pivot point. The immediate support level at 1.1718 is now under pressure, while the first resistance remains at 1.1763. With the price hovering just below the 10-day MA and above the 20-day MA, the short-term structure suggests consolidation. The The proximity to the 1.1741 pivot indicates that any decisive move will likely be confirmed through a breakout above or below this level. Watch for a test of the 1.1763 resistance next week. A close above this level would signal renewed bullish momentum, while a breach below 1.1718 could trigger further declines. My technical bias remains mildly bullish, given the current positioning relative to key moving averages and the pivotal role of the 1.1741 level. PUST closed the week slightly lower at 1.3375, reflecting a mild bullish trend amid mixed volatility. The pair oscillated between key levels, with a weekly high of 1.3456 and a low of 1.3311, marking a minus 0.03% decline. The week began with a strong push toward the 1.3456 high, driven by positive economic data from the UK. However, this momentum waned midweek as sellers re-emerged, pushing prices down to the 1.3311 support level. A rebound occurred later in the week, culminating in a close near the daily pivot, indicating indecision but underlying bullish sentiment. The technical structure shows a mild bullish bias. The price is currently below the MA10 at 1.3376, but above the MA20 at 1.3327, suggesting short-term consolidation. The Raymond swing pivot at 1.3392 acts as a critical psychological level. The price closing just below it indicates a potential bearish follow-through. Support remains intact at 1.3351, while resistance lingers around 1.3433. The current position near the pivot suggests traders are closely watching for a decisive move either higher or lower. Next week, the focus should be on the R1 at 1.3433 and S1 at 1.3351. A break above R1 would confirm the continuation of the mild bullish trend, while a close below S1 could signal further downside pressure. My technical bias remains neutral, pending a clear directional move from the immediate levels. USD/JPY surged 1.48% this week, breaking above critical resistance and confirming a strong bullish momentum. The week began with a consolidation phase near the 154.3920 low, followed by a rapid rally that pushed prices to a weekly high of 157.3950. The pair found support at 154.8987 on Thursday, before resuming its upward trajectory, closing at 157.3250. This move was driven by a confluence of risk-on sentiment and a weakening yen, which has been under pressure from dovish Federal Reserve rhetoric and a weaker US dollar. USD/JPY remains in a strong bullish trend, with both the MA10 and MA20 lines below the current price. The Raymond swing pivot at 155.2375 acts as a key psychological level, acting as a potential floor for further gains. Prices are currently trading above R1 at 155.5763, reinforcing the bullish bias. The immediate support at 154.8987 is crucial. A break below would signal a shift in momentum. Next week, traders should watch for a test of the 155.5763 resistance. A close above this level could open the door for further upside toward the 156.50 to 157.50 range. Given the current structure and momentum, I remain bullish on USD/JPY. AUDist has retreated 0.46% this week, consolidating below key moving averages and testing critical support. The week began with a strong decline from the high of 0.6661 on Monday, driven by a bearish reversal that sent prices toward the weekly low of 0.6592 by Friday. The market struggled to hold above the 0.6632 resistance level, which acted as a psychological barrier. By Thursday, the price stabilized near the Raymond swing pivot at 0.6617, but failed to break higher. The downward pressure continued into Friday, closing just above the S1 support level at 0.6603. The pair remains in a mild bearish trend, confirmed by both the MA10 and MA20 crossing below the current price. The price is currently trading below the MA10 at 0.6637 and the MA20 at 0.6612, reinforcing the downtrend bias. The Raymond swing pivot at 0.6617 acts as a short-term pivot point, while the R1 at 0.6632 continues to serve as a key resistance level. The immediate support at 0.6603 is crucial for buyers, but the failure to hold above 0.6632 suggests lingering weakness. Next week, the focus should be on whether August can reclaim the 0.6632 resistance level. A close above this would signal potential bullish momentum, while a break below 0.6603 could open the door to further declines. Given the current structure, I remain mildly bearish, with the key level being 0.6632. USD-CAD advanced 0.23% this week, with a narrow range between 1.3730 and 1.3805, reflecting a mild bearish trend. The week began with a consolidation phase near the 1.3730 support level, which held firm through Monday. Prices then pushed higher toward the weekly high of 1.3805 on Wednesday before reversing course. The decline resumed on Thursday, testing the lower end of the range, but failed to break below 1.3730. By Friday, the pair closed near the midpoint of its weekly range, consolidating above the 1.3783 MA10 while remaining below the 1.3858 MA20. The current price is trading above the 10-period moving average but below the 20-period moving average, indicating a mild bearish bias. The Raymond swing pivot level is not applicable here, suggesting no clear pivot point in recent action. Support remains at 1.3730, and resistance is currently undefined, though the upper boundary of the weekly range at 1.3805 could act as a short-term barrier. Next week, traders should monitor whether the pair can hold above 1.3730 to confirm bullish momentum or retest the 1.3805 level for potential reversal. Given the current structure, I maintain a neutral stance, as the market lacks strong directional bias and key levels remain unresolved. USD/CHF closed the week at 0.7948, reflecting a strong bearish trend that has dominated this week's action. The week began with a consolidation phase around the 0.7924 level, which served as the weekly low. Price then showed a modest recovery, peaking at 0.8001 on Thursday before retreating sharply. The weekly close at 0.7948 marks a 0.03% decline from the previous week, reinforcing the bearish sentiment. This movement was driven by a combination of macroeconomic data and broader risk-off sentiment in global markets. USD/CHF is trading below both the MA10, 0.7999, and MA20, 0.8020, confirming the ongoing downtrend. The Raymond swing pivot, though not defined numerically, suggests a critical juncture where price could either reverse or continue its downward trajectory. Current levels are near the S1 support zone, which remains intact, indicating resilience against further declines. However, the proximity to these key levels means any break below could trigger a deeper sell-off. Next week, traders should closely monitor the immediate support at 0.7924. A failure to hold this level would signal renewed weakness and potentially test lower territory. Conversely, a rally above the MA10 could hint at a reversal. Given the current structure, I remain bearish, favoring short positions ahead of potential downside momentum. NSDUS delivered a mild bullish performance this week, closing at 0.5790 with a minus 0.31% weekly decline. The pair tested key levels throughout the week, forming a narrow range between 0.5757 and 0.5830. The week began with a strong push toward the 0.5830 high, driven by a positive shift in risk appetite and a weaker USD. However, pressure mounted as traders booked profits, pushing prices down to 0.5757 on Thursday. A rebound on Friday brought the price back near the midpoint of the week's range, ending slightly lower but maintaining a mild bullish bias. The technical structure shows a clear divergence between the MA10 and MA20. The price is currently below the 0.5791 MA10, but above the 0.5752 MA20, indicating a potential short-term reversal. The Raymond swing pivot at 0.5796 acts as a critical psychological level. The current price sits just below this pivot, suggesting hesitation from buyers. Resistance at 0.5807 remains intact, while support at 0.5784 offers immediate protection. The pair is trading close to the lower end of its weekly range, with the trend line still leaning mildly bullish. Next week, focus should be on whether the price can break above 0.5807 to confirm the bullish momentum or fall below 0.5784 to signal further weakness. Given the current positioning and the bullish trend line, I remain cautiously optimistic.